Tris, I hope I found you well. Listen, we are in the fourth quarter. A lot of people are wrapping up the year, and some people want to make last minute decisions. I recently did an interview with CNBC Africa Power Lunch, and I was just talking about how we can diversify portfolios also from a CFD side, CFD platforms. Well, gold has been trading at all-time highs, and I was also talking about level of profit taking, as well as how we can reload when gold is going to give us a bit of depreciation down to certain levels. That way, we can see if we can reload positions or not. Is it safe to do so or not? Some people are looking into shares and stocks, especially South African ones. I was also talking about that WeBack, has MTN, and All Mutual. How can we diversify portfolios? Listen, watch this video, and I think maybe it can give you a glimpse of how you can go about ending the year. Also, don't forget to like, subscribe, and hit the notification bell so that you can be notified when we drop another episode. Cheers.
This is despite the decline in the euro metal. Joining me now for more is MJ Givens, CEO for Traders Connect South Africa. MJ, thank you so much for making the time to speak to us. It's a positive start to the Wednesday trading session across the board, but just your view on what's driving sentiment right now.
Well, Boris, thank you so much for having me, and good day to the viewers. I think right now the global markets are patched in a delicate state, right? And I think we are seeing a modest growth across the world, but I think there's nothing in particular or spectacular rather. With advanced economics under pressure, emerging markets are trying to carry some of the load. And I think we've been seeing trade tensions as well as supply chain disruptions and currency insecurity remain very real headwinds. And all of this sets a backdrop of what happens in South Africa. And I think if global sentiments improve, there is an upside for the JSE and also for local investors. If a global momentum, however, disappoints, I think we will definitely feel the ripple effects. And the rand is doing quite well, as you clearly said, the 17 rand 09, the best so far 2025. I think what the emerging markets are trying to do is to take advantage of the weakness that is coming from the dollar, as well as we are seeing a lot of institutions, by the way, getting into a safe haven assets like gold. It was trading around 4,350. We as a company, we're looking at 4,350 to 4,400 an ounce as profit taking because of all the currency devaluation and global uncertainty. But yeah, I think in a nutshell, it's all green from emerging markets, and we just need to take advantage of that.
And speaking of the rand, help us understand some of the factors driving the sentiment there, and whether you expect the momentum and current levels to remain and be sustained.
Well, look, I think it's a temporary move. 16 rand, perhaps 16 rand 99. Look, I don't want to come in as like a palm reader or something, but I can clearly say that we might see the end of this strength, given the fact of we are expecting the Fed to cut some rates by at least 25 basis points. And that can also give some strength coming in from the dollar. So I think it's a temporary move, but I'm not seeing the strength being there for some time. Maybe in the next week or so, we might seeing it trading maybe around 17 rand 20 or so, because the strength is just coming from the weakness of other majors like your US currency.
Yeah. MJ, you just touched on the Fed. I mean, it's all eyes on the Fed today, of course. And while markets are anticipating that 25 basis point cut, is there room or a chance even for any surprises?
Well, look, turning into monetary policy, I think the Federal Reserve is being watched closely by everybody. Markets are expecting, like I said earlier on, perhaps a 25 basis point rate cut, or at least a strong signal towards it. But I think the Fed is walking a fine line and is sending a message out there. Inflation has eased from earlier highs, yet growth remains soft and employment dynamics are also mixed. I think for us as South Africa, a rate cut is in the US. In the US could lead into a capital more willing flow into the emerging markets. But if the Fed hold off because it maybe seeks a risk that could tighten conditions globally, I think it might give us a bit of challenge, especially in our market. So yeah, it's only a matter of time. Around 8 p.m. today, we'll hear what the Fed has to say, and then I think we'll take it from there.
But what kind of tone are you expecting to hear from the Fed? I mean, are you expecting them to be more dovish or more hawkish? And I mean, we do know that this institution is data dependent, but it has been starved of economic data, just given that the US shut down.
Yeah, well, look, I think as I've mentioned, the Fed is just signaling a caution. Inflation is cooled at some point, but growth, I think it remains soft. Also, from the IMF, we've seen that they've seen a decrease in global growth, and they're also expecting another decrease in global growth in the next year. And I think the labor market is also showing some cracks. For investors, a rate cut could fuel equity markets, but capital flows into emerging market. But if the Fed, as I've mentioned, holds off signals weakness into the outlook, the opposite may actually happen.
Okay. MJ, let's talk about artificial intelligence. I mean, investors can't get enough of it, clearly. And this is despite worries over the sector's excessively high valuations. How confident are you that AI will find its footing as a sustainable revenue-generating business in the long run?
Well, it's all about being strategic at this point. Every technology that will be developed, it will always depend on what the big institutions are doing. NVIDIA has also released some information, and we have seen that US tech earnings at some point is under a spotlight. And I think major companies are reporting results as well sometime this week, if I'm not mistaken. And expectations are also elevated. If they beat the risk appetite, I think we are likely to receive a boost in emerging markets so that we can benefit out of it. But I think the message that I can say is that AI is here to stay. It only takes one to see an opportunity and takes advantage of it. I mean, if you look at back then, the introduction of search engines like Google, there were people that were a bit skeptical about the development of that technology. But here we are now. We are in an era of using search engines on a daily basis. And people that were sleeping on tech earnings or techs back then, they lost out on big moves that were happening. So I think AI is just a matter of appreciating the technology, and it's a race between the US and China who can actually pull out the better technology for people to take advantage. So I would say Palisade is here to stay. Let's see how we can capitalize out of it.
Okay, I'm glad you touched on that. You touched on capitalizing on it, because I was going to ask what your strategy for the AI trade is.
Yeah, well, look, I'm closely looking like NVIDIA as a company. I've been piling up more positions on NVIDIA. Yeah, we might see a slight decrease, but for me, it's a matter of any decrease that comes within, it's buying at a discount. It's buying at a discount. I mean, I am closely looking at what the AI techs are doing as well as crypto, right? Getting the dip and buying at the discount, taking advantage of it. And I think for JSE, on the other hand, tech earnings outcome matters, not because our local companies are big tech firms, but because global risk sentiments and liquidity affect all equity markets, including ours.
Okay. And looking at gold, which appears to be in correction territory, with prices now trading below that $4,000 mark after breaking a record $4.3 dollar per ounce last week. But how far low will it go in your view?
Well, I wish I knew, but I'm actually looking at a discount myself. Like I said earlier on, we were looking at 4,350 and 4,400 for profit taking, but we are also closely looking what hedge funds and money managers are doing, especially big companies like BlackRock. So when we look at the COT data, which is the commitment of traders, we are seeing that a lot of big institutions are hedging the market at this point, right? Meaning to say they have not figured out whether we should go long at which price and go short at the other price. They are looking at what retail sentiments are coming with. But for me, I'm actually looking at 3,900 to reload more positions, and possibly again 3,800. It's a possibility. But let's also not forget that gold sometimes is seasonal. During a season like this, remember we are now nearing the end of the year. So most institutions as well, they're just looking at the profit taking. But me, myself, in the retail perspective, it's only a matter of time. I'm looking for those discounts and reloading to the upside. Can we see 5,000? I don't think it will happen yet, next year, or this year rather. It's something that I'm more confident in. But look, it's an uncertainty and a hedge against currency devaluation. Look for discounts and look to reload. But at the same time, remember, we are not also following hype. If you follow hype, you also can be caught on the wrong side, because a lot of people were looking at 4,400. We did not reach 4,400, and we had a low yesterday. It was trading at 3,000. It touched 3,900 and something, which then gives you an idea that those that were actually buying at around 4,350, they are at the moment they are out or they are down. So yeah, you just need to be strategic looking at those points to enter your positions.
Okay. What's also on market participants' radar is these developments between Trump and Xi. He's in Korea, and he will meet with his Chinese counterpart tomorrow. Is there anything specific that you are looking out for just in terms of the outcomes from those discussions there?
Yeah, absolutely. As we spoke about we're looking at the talks between Xi and Trump and how we can take advantage of that. And I think on the geopolitical front, the upcoming meeting between Trump and Xi is a key moment. Trade tariffs and investments restrictions and broader U.S.-China relations are on the agenda, as you have known. But if the two leaders can make progress, that would ease a major headwind for global growth, which in turn will be a positive emerging market equities. On the flip side, I think if the meeting falls short of expectation, risk may rise, and that will likely tighten conditions for markets such as the JSE. And we spoke about the rand earlier on. I mean, if anything comes positive out of this, I think that's when we can see the US dollar strengthening, and that's when we can see emerging markets also losing some ground.
Okay. MJ, quickly before I let you go, my director is telling me that I've run out of time, but there have been quite a number of results, companies coming out with the updates there, MTN, Astral, We Buy Cars and Old Mutual as well, but those are from yesterday, We Buy Cars and Old Mutual to be specific. Let me allow you to maybe pick your favorite and tell us why.
Well, at this point, I think I'll go with Old Mutual, not because you are having the CEO from 10X as a guest, but look, I think Old Mutual has made a strategic move there. It has acquired a majority stake in the 10X investment for about 2.2 billion. That's a strategic move, and I think it was a smart thing to do. That signals a shift of Old Mutual, placing it at the bed of technology, enabled a passive investment and a wealth management solutions in South Africa. I think it reflects a repositioning from a legacy insurance towards growth areas in savings and investment. And I think for us, we're also looking at, as a firm, we're looking at Old Mutual as worth watching because it may benefit from structural trends in the economy and investment flows rather than just being a traditional insurer.
Okay. MJ, I shall pass on these remarks to the CEO of 10X when I chat to him later. But we'll leave it there for now. MJ, thank you so much for making the time to speak to us. And that was MJ Khasi, CEO at Traders Connect South Africa. We are headed into